Are you familiar with the term prorate? If you're a small business owner, an accountant, or just someone who wants to get a better grasp of financial concepts, understanding proration is essential. So let's dive into what proration means and why it's such a crucial concept in accounting. At its core, proration is about fairness. It's a method used in accounting to spread costs, payments, or benefits over different time periods or among various parties. Imagine you've got a group of friends who decide to split the cost of a pizza. If one friend eats more slices than the others, it wouldn't be fair for everyone to pay the same amount, right? Instead, you prorate the cost based on how many slices each person consumed. This is the essence of proration, ensuring that everyone pays their fair share based on usage or contribution. Now, why is proration important? Well, it helps businesses manage their finances more effectively. When costs are prorated, it allows for a clear understanding of how much each service or product truly costs over time. This is especially vital for budgeting. By analyzing how much time or resources are spent on different projects, businesses can adjust payments accordingly and avoid overspending. Imagine running a project where costs are piling up, and suddenly you realize that you've overestimated the budget because you didn't account for the time spent accurately. Proration can help prevent situations like that. So, how can you implement a prorated system in your business? Here are a few tips. First, make sure to clearly outline all parties involved in any agreements. This way, everyone knows who owes what and when. Next, create a timeline for payments. Keeping track of when payments are due is key to maintaining a smooth financial operation. And don't forget to document everything. Keeping accurate records of transactions will make it much easier to adjust payment amounts when necessary. Now, let's address some common misconceptions about proration. First off, proration is not a sneaky way to avoid paying taxes. It's simply a method for fairly allocating costs and does not alter your total tax liability. Secondly, proration is not the same as offering a discount. While discounts may lower costs, proration is about equitable distribution among participants. It's also worth noting that proration doesn't always lead to savings for everyone involved. Sometimes, one party may end up paying more than their fair share, depending on the situation. And here's another thing: proration is not just about money. It can also apply to resources like time or materials. For instance, if you're working on a project that spans several months, you might prorate the resources used over that period instead of lumping everything together. You might be curious about where the term proration comes from. The word has roots in Latin, deriving from proratio, which means a sharing out. It's been part of accounting lingo since the early 1800 seconds. David Ricardo, an English economist, first introduced it in his writings, suggesting that taxes should be paid proportionally over time to ensure fairness. Over the years, many accountants and economists have built on this concept, making proration a foundational element of modern accounting practices. So, how does proration relate to accounting? Let's break it down. First, it helps accurately allocate costs over time. This ensures that financial records reflect the true cost of transaction, which is vital for any business. Second, it balances financial obligations. When splitting payments or benefits, proration ensures that all parties are treated fairly. It's like making sure everyone at the pizza party pays for the slices they actually ate. Proration also plays a crucial role in calculating profits and losses. By spreading expenses over the right periods, businesses can get a clearer picture of their financial health. This understanding is essential for making informed decisions and planning for the future. Additionally, it helps track accounts payable, ensuring that payments are made on time and without discrepancies. Now, let's look at some practical examples of how proration is used. Consider a company that leases a retail space for a year starting in October. If the tenant wants to pay the entire year's rent at the end of the lease term, they would prorate the payment based on the time they occupied the space. If they only occupy it for 8 months, they would pay 2/3 of the annual rent. This makes it easier for both the landlord and the tenant as it aligns payment with usage. Another example involves an employee who joins a company in January and leaves in May. Since they only worked 5 months, it wouldn't be fair to give them a full year's worth of vacation days. Instead, their vacation entitlement would be prorated based on the time they worked. If they were entitled to 2 weeks of vacation, they'd receive a fifth of that amount, which is just 1 week. This ensures that employees are compensated fairly for their time with the company. Proration can also come into play when a business finances a large purchase, like office furniture. If a company buys furniture for $9,000 and finances it over 3 years, they would prorate the payments into monthly installments. In this case, it would amount to $250 per month until the debt is paid off. This makes large purchases more manageable and helps businesses maintain their cash flow. Now, how do you actually calculate prorations? It starts with understanding what needs to be prorated. This could be anything from taxes to fees that need to be divided based on specific regulations. Next, calculate the total amounts involved. For instance, if you're dealing with taxes, figure out the total amount owed before determining how much each party needs to pay. Once you have the total amounts, divide the costs among the parties based on their contributions. Finally, finalize the calculations to ensure everything aligns with the initial agreements. This process may seem straightforward, but it can become complex, especially when multiple parties are involved. When is a prorated system appropriate? There are several scenarios. Real estate rental agreements are a prime example. If a tenant moves in halfway through the month, they should only pay for the days they occupy the property. Insurance policies also often use proration when coverage changes or is canceled. Utility bills can be prorated based on actual usage, ensuring customers only pay for what they consume. College tuition fees can also be prorated when students transfer, ensuring they only pay for the credits they've earned. However, while proration has its advantages, it also comes with drawbacks. One major advantage is flexibility. A prorated system allows businesses to adjust their budgets as needed, which can be invaluable in a changing financial landscape. It also promotes transparency, making it easier for management teams to track spending. On the flip side, proration can be complex and time-consuming, requiring careful attention to detail. It may also lead to potential errors if not managed correctly, especially when relying on manual processes. When setting up a prorated system, several factors need consideration. First, you must understand your business model and how a prorated system will affect it. Conduct a cost analysis to assess potential impacts on profitability. Accurate forecasting is also vital to anticipate changes in customer behavior. Customer retention should be a priority, as transparency during transitions is key to maintaining trust. Automation tools can streamline the process, making it easier to manage billing and invoicing. Lastly, ensure compliance with any regulations that may apply to your industry. Implementing a prorated system can be challenging for business owners. They must grasp the concept and how it affects their finances. Customer complaints may arise if clients don't understand why their bills fluctuate based on usage. Setting up the system accurately requires time and resources, and keeping track of transactions can be daunting without the right tools. In conclusion, understanding proration is essential for anyone involved in accounting or financial management. It's a concept rooted in fairness that helps businesses allocate costs, manage budgets, and ensure equitable treatment for all parties involved. By grasping the principles of proration and implementing a system that works for your business, you can enhance your financial practices and ultimately set your business up for success. So, the next time you hear the term prorate, remember it's not just an accounting term, it's a powerful tool for promoting fairness and clarity in financial transactions.